Welcome to the Building Doctor Show.
All right. Welcome to the Building Doctor Show. I'm your host, Jens Johansson. Glad to see you here to learn more about your buildings. Today, you are not going to fall asleep, but we're going to talk about insurance. We're actually going to talk about builder's risk insurance and why we think HOAs should consider it. So if you're joining us today from the podcast or YouTube, if you're joining us from these other platforms today, thanks for listening, but be sure to sign up for the live content on this show, if you can make it, because you'll get your questions answered for free. And it's a great place to connect and ask any questions about builder's risk or other questions throughout the month, and we can get those answered for you live. So be sure to visit our website, j2consultants.com, to register for this, and you'll get these emails and you'll have lots of questions, which we hope you do because they help steer the show and give us content for more. So if you have a more specific question, there's always a link that you can stay tuned for and schedule a free one-on-one call with one of us. So our producer, Carolyn's going to be monitoring the chat, and I'll go through the Q&A panel at the end of the show. As always, we always give away some swag, so stay tuned for a little raffle giveaway and you'll get some cool things. So remember, this show is for educational content only. We're not giving you legal or financial or engineering advice here on the show. And don't forget to hit that like and subscribe button and ask questions. All those help our little ratings and help us create more content for you. So let's get into today's agenda here. No, we're not doing that. Yeah. Okay. So we're going to talk about the common insurance policies at play in, any remediation project. What is builder's risk insurance, and what does it cover, and when do you need it, and what is this extra thing called, this particular kind of policy? When does it kick in? When does it end? How is it different, and why HOAs should consider it in big remediation projects? It's usually in new construction, but big remediation projects have some of that. We'll talk about some myths or some misconceptions, and then give you an outline of when is it worth it and when it's not, why you should think about it. So, okay, so the usual policies in place. We've got the existing property policy. So our premise is we are working on an existing condominium building. We're repairing it. We're doing a strip and reclad or a big roof job or a plumbing repipe or any of these it's a bigger project than just painting it. So you've got the existing policy in place. It's called the master policy. And this is the condo policy. And this covers fire, flood, some kind of damages, slip and falls, things like that. Now, if we have a contractor on site, whether they're a general or a sub, they always have what's called a CGL policy, a commercial general liability policy, which covers the contractor's accidents or some acts. And it brings in automobile policy and labor and industries, or in Washington it's labor and industries, in Oregon it's BOLI, Bureau of Labor and Industries. Every state has a state policy, and that state policy rolls over to OSHA federal requirements, and so they get involved in that and make contractors have a construction contractor policy. Then we have subcontractor policies, and so those are again like contractor policies, but we have in a subcontractor relationship, we have what's called a third party relationship. So client hires general, they have a first party relationship. General then hires subs to the client. That subcontractor is a third party. And so we'll get into some of the nuances on that. But kind of the piece there, the thing there, if a contractor self-performs work with their own forces, there's often some insurance language there that says they don't cover their workmanship. And So from an insurance coverage standpoint, it's good to have subs. But what that essentially prevents is the insurance company isn't covering stupid insurance. And so what I mean by that is an unscrupulous contractor could just, if they had that, they would just not do the work and then tell you to go call their insurance company to finish the work. And so that's why the insurance companies say we don't cover their workmanship. That's construction defect, right? So that's a exclusion. But the idea is that if there's an accident, unplanned for event, people are doing things in a reasonable fashion, we'll provide coverage. So what we end up with, well, then we also have resident policies. So individual unit owners have policies within this master association. So what we run into is we have a master policy that covers fire. We have a resident policy that probably covers some fire. We have a contractor policy that covers fire. And we have a sub policy that covers fire. So we have 4 policies that cover fire. Who pays first? And who has coverage for what. So in that weird resident example, their toaster catches the unit on fire. That goes out the window and damages the contractor's scaffolding, which then falls over and hits the contractor's rental forklift. And that tips over and hits the pile of new windows waiting to be installed. So whose policy, the renter's policy never contemplated covering scaffolding or a rental forklift or a pile of windows used for other residents. And so this is the kind of scenario and how the scenario plays out. So who covers what? Who has coverage for what? If 4 policies all have fire coverage, when do they kick in? What about the deductibles? The master policies we're seeing? We've done some other episodes on how condo insurance policies are changing and those deductibles are going way up. So the master policy may have a $25,000 or $50,000 deductible. Okay, so the coverage kicks in after $51,000. Who pays for that 50? So you can kind of see, not only do we have gaps, we have differing policies for differing things, and that thus creates the mess. So, okay. So let's talk about, the toaster example is a little weird, but the problems, here's, kind of the common problems. The condo property policy contemplates repairs and maintenance, but they're not contemplating typically large repairs. And so this is where we got to get with your insurance broker, or you need to ask your broker or agent. So this is a little larger than routine maintenance, for instance, or maintenance or maybe replacement. But what if we're shoring up the building? What if it's settled a little bit and we have to shore it back up and the shoring has an issue? Was that contemplated in the original policy? And so scaffolding or crane collapse, you see those on the news. They're not really covered by your property policy, but the crane hit the property. So you have to fight it out with the GC or the subs or even the public. Damages to the materials or equipment not part of the building yet. We ordered a big container full of windows, or we ordered a big pallet of plywood or siding. It's sitting on site, but maybe it got vandalized or stolen. Once it's usually attached to the building, then it's covered under your building policy. When it's not attached, it's sitting right there. It's on site, but it's not attached. And so these are the little things we're talking about here. So the subs policies may pay for cars damaged. They may pay for neighboring damage, but that bystander or that, this person on the sidewalk often has a gap. The China collection would often have a gap. The fine art, I've seen all sorts of, here's really fancy art that the contractor's policy didn't contemplate covering. And so anyway, you have these little nuances here. So these are, real things. The other problems kind of continued. We have non-employees on the site, and how these are defined is under the resident policy and the master policy. It's the resident and their guests, or the residents, or the people who are supposed to be there. In a commercial business policy, it's the tenants and their clients. Think about that mixed use building that has a Starbucks on the bottom floor. We got everybody coming into Starbucks, but something fell off a ladder and landed on a person there. So anyway, then think about the terrorism stuff and the latest kind of violent protests and things like that. So now we're even getting this new term, domestic terrorism or domestic terrorism. And so why is the news and government saying that? Well, they're saying it for insurance coverage and for, kind of FEMA kick in and, all sorts of reasons. But these sorts of things can, oh, that's right. I have all these other people on site, and maybe I'm next door to the federal building that was the target of the angst of the protest, but my windows got knocked out too. And so, all right, okay. So contractor has an interesting little coverage thing. Contractor under the Labor and Industries has all employees on site, and how that transfers across if the contractor has a active construction site and the Amazon delivery guy comes up to a unit owner and delivers the package, but the Amazon guy falls in a hole. The Amazon is an employee, so the contractor even has responsibility for employees on site, and so that's where the delivery people and stuff like that come into play. So, okay, most common risks. Here's, the most common risks are employees getting hurt. So and even I'd call it, so residents are down there too, but employees getting hurt. And that's what contractors L&I policies cover. That's very state specific. It's a requirement. We have typically great coverage for employee related claims. Next, we have, auto issues. The brakes on the contractor's truck failed, or the parking brake wasn't set. It rolled in, hit the Mercedes then hit the babysitter. And so, okay, now we've got a resident insurance policy with the car, and then the babysitter was a guest of okay, so now we kind of trickle. And so you can see kind of these secondary causal factors, or, a chain of events. Third, overhead things, ladders falling over. That's a very common overhead risk. Contractor's CGL policy has coverage for that pretty clearly. Now we got fire and flood. So remember, we went through we have 4 policies that cover fire. So we have to determine cause. Was it a construction cause? Was it a resident cause? Was it a homeless person cause? So now we get into different property policies. Now, if fire damaged the building, it's already been built, so the property policy pays for that. But it also damaged the stack of material or the rental equipment or the whatnot. And so contractors' tools and materials usually aren't covered under the master policy. They may or may not be covered under the contractor's policy. So that's, again, understanding what all these policies are doing. So storm damage, a very common thing. The winds were higher than expected. The rainfall was more than expected. Even if it's in the contract requirements, contractor shall provide weather protection. Well, I looked at the storm. It said 20-mile-an-hour winds and 1 inch of rain, but actually we got 60-mile-an-hour winds and 4 inches of rain, and that overwhelmed my weather protection efforts. So we have some, was it reasonable or not? And then, of course, residents and non-residents getting hurt. That's a claim against the contractor usually, but it can be a gray area. Did the resident take off the contractor's safety barrier across the sliding glass door and walked out onto the deck anyway, even though there was a posting that said don't come out on your decks? Those types of things. And, obviously theft and vandalism is on the rise. That could be a contractor claim issue. If it's in the contract, you're responsible for covering vandalism or theft of materials not installed. So these are the most common areas. Now we get into kind of reasonableness or negligence. Takes time to prove. And so you had planned for the 20-mile-an-hour storm, but it actually turned into a 70-mile-an-hour storm. Was your planning reasonable for that level of storm? You had planned for, was the temporary chain link fence reasonable, or should it have been locked and double locked, or lights on, or all these things? So was the contractor putting one board across the sliding glass door to prevent you from going out reasonable, or could you climb under that easily? Should they have boarded the whole door over? So, or maybe their securing actually allowed for break-in and somebody got harmed. So reasonableness and negligence take time to prove delay. And three insurance companies may be willing to pay, but they're also taking that, well, prove it and I'll pay for it. If you're negligent, I'll pay. If you're not negligent, I'm not going to pay. And so there's a standoff. And so these are things that you need to be aware of, and just understand that timing or delay of time is a big risk. Okay, so that's the gray area. Any gray area of claims takes time. You have to prove the negligence, then you can proceed. Delays and potential non-coverage. So kind of talked about this stuff. The scaffoldings tipping over is probably one of the biggest things we see. And so, was it general contractor supplied scaffolding? I remember when lots of generals would buy their own scaffolding because it was cheaper and they could erect it and they could do that. But then they actually made a business decision to move to a sub erecting, so they had more liability coverage. And there's requirements for how the OSHA requirements for how the scaffolding is erected. Did the sub follow all the requirements? And so it's kind of this interesting risk shifting. Again, third party claim or claim involving other parties. Insurance policies will be arguing who pays first, who pays deductibles. No, the deductible is there, that $25,000 or $50,000 deductible. It's not the responsibility of the insurance company to pay that deductible. But is that a damage that then gets assigned to the person who is responsible to pay? And oftentimes the resident policy is left out of that deductible coverage. And so it's interesting to see how we can tie all these things together. And then ultimately cleanup and remediation takes time. So we had a flood. Now we got to dry it out. Now we got to remove stuff. Now we got to kind of take 2 steps back, then rebuild. And so schedule delays and timing delays and all these things. Can we speed back up? Well, that's acceleration demands. So you can see this stuff. So one size fits insurance goes out the window. Okay, so this is what builders risk insurance. So it came from, or it's primarily used in new construction. So when we're talking about existing condos, they're already built, they're already a condo, it's already this big, we have a property policy covering it. So new construction is, I've got a 5-story building, I'm building, and I'm on story 4, not quite done yet, can't quite get a property policy yet. I'm during construction, so it's at the builder's risk. The builder is under risk. I got to get this thing built, then get a policy for it. So the market moved in and said, here's a during construction builder's risk policy. Now on the remodels or the existing buildings, it provides a better, more umbrella type coverage of this gap or these times or these delay things we're talking about. So it'll cover damage to materials and equipment before they're installed, even on transport or delivery or stored on site. Covers damage to equipment. Here's the ladders and the pump jacks and the scaffolding and the rental forklifts and things like that. Oftentimes we'll cover losses due to theft and vandalism or an earthquake or something, natural disasters during construction. So again, the scaffolding or break-ins or just anything around that policy. And the big thing is delay costs and some additional weather events. And some of them have just weird. I've seen some really kind of umbrella like all-inclusive type coverage things. So it's great for coverage of all the gaps. And the good ones pay first, then subrogate later. Subrogate means one insurance company chasing another insurance company to get reimbursed. I've paid this, you now need to pay me back. And they do that behind the scenes and even years later. And so you can keep moving with your project. And so, in that, back to that 5-story building, I framed up 3 floors, and then the arsonist comes in and burns it down. Now I got to start all over. I got to take that pile of rubble and haul it away. Now I got to get new materials and maybe even redo the foundations because the foundations got hot and cracked and the steel warped. And, so it's that during construction, but also an umbrella for the big policy. And the other big thing to think about is builder's risk is for the project size and it's project based. So if we've got a $10 million project, we can get a $10 million policy. And how that's different is typically most subcontractors and even generals, smaller generals, have a $1 million CGL policy. So once that scaffolding lands on 10 Mercedes, that's their $1 million right there. So the policy is exhausted. It won't pay for anything else after that. And so having a project specific with a larger cost to cover that, I want to cover the whole job. It's a $10 million job, and I want to cover the cost of this. And so you can buy it per project cost. Okay. And then when does it start? When does it kick in? Typically starts when construction or remediation actually starts. It doesn't automatically start when you buy it. And so they want to know when the job starts and then obviously when the job stops. And so it must be purchased like any insurance policy before the event happens or before work begins. In some cases, you can get it a little early to cover materials being stored or transported in advance. This is important for big, large orders, especially now when we're trying to protect against inflation or tariffs or things like that. At moment of contract signing, the contractor should, it's best business practice, to go place their window order right now, because in a month, window prices may go up. But if they can place that big order, they've locked it in. Now they have to deal with this big order, maybe on site. So I've got a bunch of windows sitting here. If kids start throwing rocks at them, we're going to have some problems. But that's how contractors can what's called buy out a job. Buy it out at today's prices. Who cares what happens in the next 12 months? They've secured the price and we've negotiated that. So especially when we're front loading pricing or purchasing, it's nice to have builder's risk to cover that. So again, people, there's been some misconception. Can I buy the policy and have retroactive coverage? No, got to buy it first so you're protected, just like any policy. Okay. When does it end? So it ends when the construction project is either substantially complete. So once that building is built and I've got certificate of occupancy, now I go get a property policy. Or once that addition has been added, I go add that square footage to my property policy. So then the builder's risk policy says, okay, this is really for the building or the repair. Once the repair is done, it terminates, and you don't get any more coverage for what ifs. And so from the insurance company standpoint, they don't want to continue insuring vandalism and continue insuring theft. Hey, the project's done. Here's your, it's typically tied to the C of O, certificate of occupancy, or substantial completion. Or they'll give you, 30 to 90 days to get your other policies in place and be done. If the project is abandoned or delayed, they may have some verbiage in there to say, yeah, it's really for during construction. Little bit about occupied remediation. So, if the residents are using it, you need to work with your builder's risk policy and say, this is fully occupied. We want it for the gap insurance. We want it for the umbrella. We want it for the project pricing. And so they understand what they're insuring it for. So you will get back to your property policy. Okay, so the differences. So standard property policy protects a building as it exists, includes permanent structures, personal property, standard perils, fire, theft, etc. So the builder's risk covers buildings construction during these times, and during the building or during the construction. The coverage for the standard policy doesn't cover major alterations or that chain of events. I didn't contemplate you having this and this and this and this going on. I was selling you a year-long property policy, assuming you would be doing normal condo things, but you're doing some extra stuff. So that's where the builder's risk comes in, covers, provides these additional things. And then your standard policy covers, if it's damaged after construction. This builder's risk is temporary during construction, during repairs, and it ends. So that's kind of the differences or how they kind of work together and supplement each other. Okay, why HOA should consider it. Protection during construction, covers project materials and work in progress, mitigates risks for delays and accidents, protects HOA's investment and coverage gaps, often required by lenders and mortgage companies, eliminates the gaps or confusion, pays first, then they go collect, and we've got covers the cost of the project. And so like I said, most sub policies or contractor policies, $1 million. You can get bigger coverage for this. So the big takeaways here. Often required by lenders. So this is the lenders. If you're doing an HOA loan, they're saying, hey, that's fine. We'll give you, $10 million to fund these repairs, and you can figure out how to do your assessment to pay back the loan. But as a requirement of the lender, we want a builder's risk policy to make sure there's no delays, no gaps, no weirdness, no additional funds going to pay for deductibles, and just disputes that contractor gets mad and leaves because you burned his forklift down and he doesn't have money in that, or you burned his pile of windows down and he doesn't have an extra $150,000 to order new windows. And so we're seeing the lenders now as one of their requirements, actually requiring it. And your mortgage companies may require it too. So I think a little bit different, maybe worth doing a little survey. I don't know how many people know what their mortgage insurance covers, but you can take a look at the boards at least and say, do we have coverage for these kind of big repairs under our master policy? Yes, no. And so then, why you should consider it. If you're seeing these coverage gaps, if you kind of have a weak master policy because they were going to cut you off and this is the last ditch policy you could get just so you have something, but it has huge deductibles and everybody's kind of scared of it. It's kind of a, what do you call that in the health insurance? It's a catastrophe policy. It's not really main everyday medical policy, but it's there for if I get in the ER room. And so you might, we kind of have a weak master policy that has lots of gaps. So this builder's risk might be a really good idea to reinforce things. And then the same with contractors of, I've really got to work with this guy for his price, but his insurance coverage isn't great, or I wish he had more. And so it's another nice way to make it sleep better. So, and then again, cost of the project is a big deal. Okay. Here's some of the common misconceptions. Client saying if the contractor has a CGL policy, does the HOA really need additional insurance? And so we've talked about several scenarios, and I hope that you can see some of these gaps in here. And so, and especially materials stored on site or damage to partially completed work. The misconceptions of you can't use it in big repair projects. Well, you can, and that's what we're talking about today. So it's not just for new. So let's see, and yeah, we talked about holes, but this is when do we think you need it? When do you actually need it? When does J2 think you need it? You have a large complex project. We're recladding everything. There's lots of buildings. You're obviously doing a whole bunch of work. We're getting down to the framing layer. We're pulling off sheathing. We're exposed, lots, heavy duty work. Plumbing replacements. We're inside of every single unit. We're touching everything. We're there's water supplies and pipes being turned on and off every single day. Major roofing, big abatement jobs, big HVAC jobs. Again, all these are really involved with the inside and outside. Project where there's lots of expensive materials stored on site for a long time. So this is the pre-buying, and we're seeing, we're trying to be as cost conscious as possible in this changing environment. And so we're seeing contractors pre-buy. Let's buy it now, and we're going to use it in 12 months. And so, and then projects with high exposure to theft, fire, and vandalism. So this is again, the Fed, you may be next door to the federal building. The federal building is the target of all the protest angst, but fire and rocks and whatever get thrown through your building, graffiti, just on and on and on. And then if we've got theft and lots of people potentially on property. So I've got a busy site. It's right next to a bus stop. All the people hanging, waiting for the bus are kind of getting impacted or potentially exposed to whatever's happening in this job. So again, mixed use buildings, downtown buildings, regentrification or bad parts of town. It's a fancy word for some of the buildings are cool. A lot of the buildings are still rougher part of town. And and your surroundings. The commercial work, whether if it's a high-rise condo, everybody on the sidewalk during coming and going from offices and things like that. So you see a lot more safety, a lot more, again, potential gaps in coverage there. So okay, and then probably don't need it. Smaller, more contained repairs or projects with minimal risk. Project where the HOA feels comfortable with the contractor's coverage and their coverage. And so somebody's gone through the exercise of, I've met with my broker, met with my HOA attorney, I've gotten a copy of the prospective contractor's insurance. We haven't quite signed the contract yet, but you're the one we're going to go with pending insurance review, pending this, pending that. And so give me a copy of your insurance policy. We want to take a look at it. And so doing that a little bit of upfront work. Okay, so it's ultimately a financial decision. It's ultimately up to the HOA's board, often with input from their legal and insurance advisors. Builder's risk insurance is generally arranged by the contractor who passes the cost to the HOA, the client, but the HOA can still secure it themselves for additional control but this policy is priced on the contractor's risk experience and the insurance company's risk assessment of the contractor. And so what that means is the contractor's insurance broker has worked with this contractor for a long time, knows their safety record. They haven't had insurance claims. They've done several builder's risk policies in the past, never had a claim on it. And so they get, preferred rates. And or if the HOA buys it and says, hey, we want this builder's risk policy, the insurance company is still going to say, who are you going to use? ABC Construction. Okay, we got to look them up. Here's the cost for you. Now this is a policy that benefits both of you, but either party can pay for it. But like I said, it's usually best for the contractor to get it and provide it for the job. So there's a cost. These policies cost 1 to 5% of the contract price. So for a $5 million repair, they can cost $250,000. And they may have a higher deductible, but most times these policies have a good deductible and they're reasonable and they're there to cover things. But again, some contractors will qualify at the 2%. Other contractors will qualify at the 5%. And so we'll talk about that in a little bit. But we've got factors to consider. So for these decisions here, exposure. So it's the number of trades, the number of tools, the equipment on site. What am I doing something is this project inherently, there might be a higher chance of risk there. Going back to I've shored up the building because it was ready to fall over. Or is it just putting new siding on? It's pretty easy. So type of work, who really bears the risk if something happens, timing and delays, things like that. Okay. What to ask your insurance broker, saying, what coverage gaps exist in the contractor's policy, our master policy, the residence policy, and what do we need? Here's what we're doing on the job. What do we need for potential risk and potential coverage? And so, and even will this builder's risk help us avoid using our HOA master policy? We probably won't even get called. The builder's risk policy will get called. What are the deductibles? So should we put it in the contract and make the contractor provide it? Or should we buy it with the knowledge that the contractor is on there and we're managing it? So this is a management question as opposed to, who has the relationship with the builder's risk agent to get anything. If the contractor buys it, can you make them do something? So there's a little bit of agency in the sense of who bought it. So it's nothing to think about. And it gets into who files the claim, who is the insured, and so who files the claim, who has claim management duties, things like that. And again, the insurance broker, builder's risk, we're really worried about ultimately people getting hurt. So whether it's employees or residents or guests or things like that. So is the neighbor covered? Is the guy at the bus stop covered? Is the passerby covered? And do we have good, is the builder's risk necessarily that coverage, or is that the contractor's L&I? So those things are there. So we've put together 20 questions to ask before deciding on a builder's risk insurance. Carolyn's going to put that link in the chat. That's just kind of a simple guide for you to kind of help you through that. So some common understandings. This first one's a myth. Seems like it covers the builder a lot more, so the contractor should pay for it. And it's kind of the reality. You either have the policy or you don't. And so to the contractor, it's cost of working on your project. They're not going to carry that policy. It's a project specific policy. And so if you want them to have that, they will pass the cost on to you. These policies really benefit both parties, from coverage to claims handling to overall speed and moving things along and not having any delays. But it seems like, well, it has a builder name on it, so it must be the builder's policy to go by. And so it's something you can go through the contract bid phase or the negotiation phase. You could have this as a requirement. We want a builder's risk policy covering the total project cost. All the bidders know, make them go buy it and provide it. Some are paying 5%, others are paying 2%. Or you can get down a negotiation and say, okay, now we also want a builder's risk policy on it. How much is that going to cost? How much are you going to charge us? Is this going to be a negotiated item? Tell you what, I'll split it with you. Is this going to be a contractor's really hungry and saying, I'm not going to let 2% stand in the way of me losing this job. I need to keep these crews busy. We got to keep going. I'll provide it for free. Okay. So there's different ways you can build it into the project bid requirements. You can negotiate it right before signing. You can share the cost, split the cost. It just depends. And that's why you have a competitive bid process. One guy's going to charge me for it, another guy's going to split it with me. So these are little things you can do there, but this is how it's. I think the biggest one is it's called builder's risk. They should automatically have it. Well, they don't automatically have it. They come with a CGL policy. So if you go back to physics, I think we're all taught the law of consumption of energy that says energy cannot be created nor destroyed, only transferred. So that piece of firewood, it'll burn, and the energy is the heat that comes out in the fire, and plus the ashes that are left over. And so nothing was destroyed. So similar law of risk. Risk is not created or destroyed. It is only shifted with insurance policies. And so insurance policies, contract language, things like that. But what we're trying to bring to light is there's this extra policy, and it may be 150 grand, but it provides pretty incredible coverage in a lot of these gaps that when this happens. So it's a business decision. Is it worth it? Basic insurance coverage is mandated. You and the contractor have to have these policies on existing. You've got your existing property policy. They have a CGL policy. But this additional builder's risk is a business decision. It's a pretty wise one. We recommend builder's risk policies on larger, more complex projects. Probably 50% of the projects we work on. For a reality perspective, around 5 to 10% of those larger projects actually obtain a policy due to the additional costs. Now, smart HOA attorneys, they come to us and say, this client's getting a builder's risk policy, period. But, okay, so they've had that conversation. They're understanding risk, and it's great. It's a nice additional layer. But we can also manage some of this risk using good contract terms for theft, vandalism, weather and storm controls. You can build this into a good scope of repair and a good set of project documents that the contractor, it's clearly here, you were to provide. And I'm sorry you lost your materials, but it's part of your requirements to do. So no charge to me and no delay for, they would be in breach of contract if they walked off the job because they were mad. And so it's like, well, it was in the contract language. And then the big thing is naming you, the client, as additionally insured on the contractor's policy helps prevent any kind of finger pointing and claim delay from the contractor's insurance regarding who pays first. And in addition, if the contractor is buying the builder's risk policy and getting your name on it or additionally insured or however that connection happens allows you to, again, be in that position. Additionally insured allows you to stand in the contractor's shoes under their policy. Say, I'm additionally insured. So that is a standard for all of our projects, and it's 1% of the time when clients proceed directly with a contractor. I was like, well, you got it named additionally insured, right? What's that? So okay, all right. So anyway, use a good expert to help you walk through this and advise on this. And then the biggest piece is you're no longer subject to those $1 million limits that they go pretty fast when new cars cost $100,000 these days, but not to mention medical claims and property damage and a gas explosion, a fire, these can be they can get out of control pretty fast. And so, and that's really the key takeaway here. Everybody plans for the worst and hopes for the best, but every crisis or disaster, if you've ever kind of been involved in one, it gets out of control really fast. And having that additional gap coverage and additional limits really helps you sleep well at night and not worry about it. So that's what insurance is, or that's what builder's risk insurance is. So if you got some questions about your building, use this. If you like typing, type learn.j2consults.com/consultant on call. Use the QR code, scan that. That gets you into set up a 15-minute call, and we can go from there. We can talk more about insurance, but put your questions in the Q&A now, and let's talk about some questions. So again, put them in the Q&A, and we will go from there. So here's some last kind of in between shows. Can we roll builder's risk coverage into the construction contract, or should the HOA hold the policy directly? So we hit on that. It's kind of a common question, and maybe your question kind of drove some of this. So thanks for the question. So I almost like it being in the construction documents and getting some competition on the 2 to 5%. So a good contractor A may have just a really great rating and it's 1.5% for them. And contractor B may have some bad claim experience, maybe new, maybe whatever, or just not have the financials to qualify for it. And so they might be 5-6%. And that'll set, having somebody 5% difference in a competitive bid, apples to apples comparison, it's interesting to see. The other way to do it is kind of I'm down to choosing between two of you. Maybe I'll keep talking to you about it, but you don't want to be down to choosing one and say, okay, give me the additional premium, 10%. It's like, darn it, I wish I had some negotiating power between these two, because remember, we also talked about you can negotiate some of that. Sometimes it depends on contractor schedule and how eager they are for this job. So, but you definitely want to be able to either be additionally insured on that or have your name on it somehow, so you can speak as an insured, whether the contractor bought it or you bought it. But you can say, hey, I'm on that policy and I want this covered. And that helps you with claims management. Okay, next question. Will our existing insurance deny a claim if they find out construction was happening without builder's risk? Yeah, that's a good one. So no, your insurance policy is a contract that covers certain things under that policy. And builder's risk insurance coverage is broader and typically pays first, but your existing policy, will deny things that are excluded under that policy. They won't deny based on you should have had another policy, or you should have done it this way, or you could have done it that way. That's not a deniable defense. Their policy says what's included, what's not included. And so they won't, they can't deny you, or potentially you should have, could have, would have done something differently. So I'd say that's a fair answer. Not an insurance answer, but anyway, I've never seen them do something like that. So, okay, so then let's see if we got. Okay, now we're over to some more questions here. I got 4 of them. Okay. First question, how important is it for an HOA to have a risk management plan? Is this a state-by-state requirement or best practice? Yeah, good question. Risk management plan would include emergencies, emergency planning. So here's the fire escape routes. Here's where the fire extinguisher is. But risk management can get into this insurance stuff we're talking about. And so, yeah, this isn't a requirement to have this understanding and discussion between insurance policies. I wish it was. I'm not sure about state-by-state requirements. That may be a question for your manager, but again, the content we're putting out here is we're seeing holes in the understanding. And so let's put some content out to kind of help people understand that hole. How how important it is to have a risk management. I think planning for risk is important. And I think that should be part of board's responsibility. Even if it's just, version 1 is better than version none. So even if it's just a very basic, are we posting 911 numbers? Are we posting emergency contact? Or do we have things posted for the nearest hospital or, medical doc in a box that can service immediate, somebody breaks their leg or something? Is that posted? Are the exits lit? Or do we have snow shovels and ice scraping and things like that? Ice melt. What to do in case of a fire, So risk management with these insurance specific, with this builder's risk policy, I would definitely, you're embarking on a 7-figure construction project. Let's spend an hour with a broker. Let's spend an hour with your HOA attorney. And let's kind of look at these little gaps here. So I'm not sure on the state by state, but yeah, good question. Emergency preparedness is key. Second question. We had a contractor's dumpster roll into an owner's car. Would this have been something that should have fallen under that or the contractor themselves? So if it's a contractor's dumpster that hit your car, it would be under their CGL policy. So it would be just like any of their, pieces of equipment. The brakes failed on their truck and it crashed into something. And lots. So it's not just dumpster, it's guy pushing dumpster and accidentally hits the car because he took the corner too tight, or too big of a load and they had to drop it and it broke everything. I mean, this stuff happens all the time. So, but where it starts impacting the resident's vehicle or the owner's car, now I have 2 insurance companies in play. Now you can see nobody's going to pay first. It's going to be this standoff and pointing fingers and who was negligent and things like that. Contractor's policy would pay for that. Now, was it a rental dumpster? So the contractor was pushing the rental dumpster. So does the contractor have insurance for rental equipment? He should. Or the rental equipment also has. And so anyway, you can see where we start getting gray real fast. But here's a problem with, one contractor on site running the contractors, and they're responsible for that. Here's a problem with 2 contractors on site, or the general contractor on site and the residents are doing some resident remodel. And I came out to a dent in my car and both of these guys are pushing dumpsters by it. Which one? Now I've got to go back to the security camera videos. Now I got, so anyway, having 2 contractors on site gets sticky real fast because one contractor is responsible for all the employees. And so this is something you kind of build into your sequencing too. We want to do all these projects this summer. Okay, well, let's do this one and end it. Do this one and end it. Do this one and end it. Let's not do them all at once. Cooks in the kitchen, right? So, but yeah, contractor stuff, damaging cars happen all the time. Okay, next one. I have had many contractors drop out of the bid after I send their bid to our attorney review. Yeah, 100%. This happens all the time. And so why contractors drop out? Number one question, oh, you want me to sign a contract? No, you just signed my proposal. See where it says client's initials on the bottom of my proposal? The proposal doesn't cover anything about insurance, payment program, or timing of payments, liability, additional insured or indemnification. Oh, you want me to actually read a 20-page contract and oh, you're too sticky, you're being too critical, you're being too contracty. I'm not going to do work for you. Maybe they have so many clients that they don't need to deal with contracts, but your basic contract identifies a lot of these contingencies and talks about the risk shifting and moves it around and does what it needs to do. It doesn't take any, whatever the contract is, the contractor can come back and say, that wasn't in the bid documents. I need to raise my price to cover that. And so that's where bid documents roll into the contract, roll into the, project. So contractors leaving. Yep. Lots of times. Now, when you go back and, another way to vet contractors. Hey, I want a builder's risk policy on this job. I want this job to be bonded. We'll probably do another one about bonding, performance bond or payment bond. You know, that's a whole nother insurance vehicle that you can use to get your projects done. But some my guys know they can't get builder's risk because they suck. And so they just, okay, give up on this one, go on to the next one. So just because they disappear doesn't mean they're bad. It just means they maybe don't want to do the paperwork, or maybe they know they can't get it done. And so kind of separating the newbies or the rookies from the experienced, these are the contractors you want to work with. Are they a little bit more? Maybe, but it goes smoothly. So next question, what covers the contractor substituting an inferior product without asking permission? Interesting. So this is scope of work. So a lot of people say plans. What is a scope of work? Scope of work, think of a recipe. So the recipe will say gold bond flour, 2 cups of gold bond flour, not 2 cups of, pick your flour. What's the flours that don't gluten free? Gluten free. It just, the bread will be different. We want you to use this kind of flour. We want you to use this particular product. And this particular product gets along with this particular product. And so if you use this one, but use the wrong one over here, they'll argue and fight and melt and cause a problem. And so that's why a scope of work is very important. Of you can't use galvanized nails in this condition, and you can't use pressure treated wood in this condition. So for this, I want pressure treated wood, I want cedar, I want stainless steel, I want galvanized, and so this is where that recipe or that scope of work is really important. And so substitutions still happen after the contractor says, I'm reading the recipe. I see what you're trying to do here. Because I'm so special, I can get a better price on this brand than that brand. Would you be interested in a substitution request? The substitution request comes back to the architect or consultant. They say, yeah, okay, red versus blue, that's fine. They both do the same thing. Yes, you can use that. Now we have an approved substitution request process. And people have looked at it from several different angles and they've said, yep, that works. And so what covers the contractor for substituting an inferior product without asking permission? Nothing. That's work product. That is, the insurance company would look at that and say, what do you want coverage for? The recipe said use this, and you went off and did whatever you wanted. Now, we then take the liability of proving the substitution. So if there's a failure, contractor's insurance said you did what? Well, J2 said we could. Now the insurance company's looking at J2. So it's like, okay, all right, we got to look at that and make sure those things work. So that risk is shifting, right? So that I think covers your questions there. And we're down to the last one. So if you got any more, get them in there. So last one, should we have at least 3 bids for any project that we are asking for any work needing to be done to meet the reserve study request? There's several different ways I can answer this question. So the first one is a competitive bid process is best practice. So I'm getting 2 or 3 bids, not 15. I'm wasting everybody's time, including myself. So 3 bids, and I'm seeing what the market is doing out there, and I'm seeing, and then I start asking why. I'm not just looking at the low bid. Now I'm going in to look at their scopes, look at their exclusions, look at their little conditions and what they're providing. I may even call them back and say, "You're really low. What's going on? Did you catch all of it? Did you see pages 10 through 15? Did you see addendums 2 through 4? Oh, I didn't see that." It's like, okay, so you're not looking at a complete picture, so you're done. But there's ways to do that. Now, read your governing documents, because this is another piece. 99% of your bylaws, governing documents, rules that you have to follow as a board say any costs over 5,000, 2,000, whatever your limit is, know it. any costs over $5,000 require competing bids. And so, well, we'll see. It's like, did you get competitive bids? Because you're required to do so. If you don't do that, now the people paying the assessment come back and say, time out, I'm not paying this assessment. It was illegally done. Ugh, big mess. So, meeting the reserve study request. Your reserve study is a timer. It's a budget. It's a best practice. It's an idea saying, hey, we think your roof's going to last 3 more years. But now the clicker is up or the timer is up. So do you still have life left in your roof? And, I've talked about that before. Just because the reserve study said I had to replace it this year doesn't mean it needs replacing. It was kind of best estimate at the time, and have somebody come take a look at your roof, and whether it's a consultant or, or I don't know if I'd ask a roofer, but ask a consultant that it's not selling you a roof. And you say, yeah, are you leaking? No, still looks fine, still done okay. You probably got 5 more years left. If you want to replace it now, go for it. But I think you still have some life here. So I think your intent was, should we get 3 bids? And yes, that's a very good practice and probably required under bylaws. And go from there. And then that little last negotiating bit that I talked about, some guys or some competitors may split those costs with the builder's risk policy. Others may have a better premium ratio, so their policy is less. Doing it all inclusive, meaning put it into that scope and requirement. And now I'm really looking at it and saying, this includes the insurance policy, right? Okay, great. We're good to go. So that is answering those questions. Okay. Then we get into the giveaways. Look at that. We've got all sorts of things there. Let's see. Today's giveaway. I was aiming in the middle of the pack. I am gonna aim for number 12. So how this works, when you sign in, you get clicked up on the queue, and Carolyn will reach out to you and say, hey, here's your package, give me your address, we'll send it to you, and we go from there. So number 12 is the lucky winner. Okay. And then we're coming out with more and more of these trainings. So if you haven't signed up for our 1-minute building insights in under a minute, this is trying to do it weekly, but at least 3 times a month. Takes less than a minute to read. It talks, real high level summary of this stuff. So that's a good one. Look for that. You can also go to this page, learn.consultants or learn.j2consultants.com/resources, or just take a picture of the QR code. And really good for new board members getting up to speed. Welcome to the board. You got to learn how to be a board member. Go to this website, watch some of these videos, come back and get up to speed. Maybe you're a new manager. We are offering certified clock hour courses now for managers. So dig around on our site. The link may be in the chat. We're doing some live events. We have some live training in Utah in a couple of days. I think it's Thursday. The next Washington one will be on July 30th. The next Oregon one will be September 23rd. So be on the lookout for the emails on those. Come on out. Love to see you and learn about whatever we're talking about. Here's another scanny thing. This is a 1-page thing, just has very quick links to be able to find us. So you can go here once, you can find our YouTube channel, you can find the Building Doctor Show, all these things. So use your QR snapper or go to learn more. And streaming this wherever you go. You can find it on Spotify and Audible and Apple and whatever. So thanks for tuning in. See you next month, and use this QR code or link if you have any more questions, let me know. But thanks for attending today, and have a great rest of the month. See ya.